Let's welcome in our next guest, Sushil Choksey, Director at Indus Equities, now joins us. Sushil, good afternoon. Surprised by the move today?
Good afternoon, Pankaj. Thanks for having me on the show. I wouldn't say I'm surprised seeing the yesterday night's global markets and whatever Asia has also performed. European markets were up smartly. US closed at new highs and Nikkei has closed at a reasonably new high for the year. So, watching the global markets and the liquidity which is gushing into US, I'm quite sure post policy yesterday where we sold off, I think markets finding some money coming back from global funds as other markets are outperforming. So a trickle which may be pouring into India plus the short covering led by sentiments on global equities would have helped. Not that I was estimating the markets can be so high, but I was not as bearish as what the market streetos seemed yesterday.
Right. Global events like ECB, Fed are lined up in the next today and probably in the next few days. Do you think there could be major market moving events, or they have already built up expectation that the street knows that's exactly what's going to happen?
I think the dollar index almost at 100 now from reaching 102 in the last week or this week early. And where the currencies are playing out in the bond market, US bond yields have moved from 245 below 235 right now. And watching the crude price also tapering off from the peak which we saw around 55 to 52, 53 range. Commodities are stable and the Fed pricing of 25 is more or less assumed on the street. So I think the noise what comes out from US incoming President Donald Trump and creation of jobs and what he wants, what his intentions are and what large corporates are speaking in US. If money has to flow back to US and if corporate tax rates are going to drop in US, how the world pans out based on US equity, US growth itself and the employment which is already at historical low if you take the last 10 years, 15 years scenario. So based on those, I think anything and everything which is dependent on global growth engine may find that India may have a little positivity cues coming from there. Developed markets versus EM may be a story which people will keep a watch. But I think if ground realities improve based on measures which have happened in last 1 month which has destroyed the market to some extent, the confidence may come back from the statements which you have heard yesterday from a global scenario basis as well as in domestic, thanks to the monetary policy that the cash circulation has already reached by withdrawal of 4 lakh crores worth of currency which has already been distributed. At the same time, I think a lot of people had thought processes that the RBI independence is lost. I think that is restored to a great extent as long as there is no commitment on dividend. I think the policy decisions are very well directed. We already know that we have lost some growth momentum. GDP forecast by RBI lowered by 0.5 for the annual year. SBI chairman on television said they are estimating that street is thinking that 1 to 1.5% is lost. I think December numbers and to some extent November numbers will indicate in loss of revenue in terms of excise and service tax. And possibly the advance tax numbers for December 15 would be healthier in anticipation of a lot of VDI's previous scheme and the current scheme where tax outflows concerned along with estimates for the current year profitability with corporates. So I think watching this scenario and the bond yield and the rupee behavior, if you combine all this, I think we may get a little sustainable direction. My personal thinking was that we are in a range of 78 to 8300, but possibly we may not see 7800 that early because everybody was indicative bearish. When the whole world is consensus is towards negativity, I think we may not achieve it in short term.
Right. What do you, earlier I remember you had recommended Bharat Forge. It's up around 6% today. It's still a buy around 950 levels?
See, if you are believing in US story and I have another thought process along with US story, which numbers for November has already been indicated by Bharat Forge quarter month on month on a positive side that the US market is reversed where trucks are concerned. So if the story on US is getting healthier and better, India consumer pricing is going to get superior in terms of I personally feel that consumer finance within next 3 months would be visible at 8.5%, which means demand stimulation happens. So ultimately Bharat Forge as a story based on US market, global auto, at the same time now they are getting stronger on power, defense and various other sectors, and even supplies to other sectors like railways. So I think if you take a totality of all these positivity which you may find with government capex picking up, I think the stock in 2017 can get back to the 52-week high which we have seen in last 1 year.
Right. Adani Ports was also among your top picks around 250. It's 280 now. The view also there doesn't change?
My view stays same because they have created infrastructure, and for the debt which they currently have on the balance sheet, if interest rates scenario is stable and rates are going to go lower, whether you borrow in dollars on a fully hedged basis or you borrow in commercial paper, if the yields are going to be around 7-8% of cost of funds, and if the infrastructure is created for container shipping going up to 7 million, 8 million type of size, and bulk cargo already operational around 150, 160 million tons, and in 3-4 years, based on certain other port developments which they are having, if your capacity is going to be visible on double established basis for container on bulk, and maybe
Sushil, I'll just come back to you about a minute remaining for markets to shut. Nifty 141 points higher, 8,243. About 30 seconds remaining for the market bell or the market to close. Let's just look at the stock. So 139 points higher, 8,242. GAIL is up 0.5%. Bharti Infratel was actually the only notable loser. Cipla is up 2%, 583. Tech Mahindra is up around 1.7. Grasim is up 2%, IndusInd Bank is up 2%, HDFC Bank is up around 2%, and Wipro is up around 1.2%. HCL Tech 795, 10 odd rupees higher. Asian Paints up around 5 rupees or so, and L&T up close to 12 rupees. M&M 23 rupees higher, 2%, 1,205. The top gainer on your screen, 432, that's Tata Steel, 4.8% higher, 9 million shares traded for Tata Steel. Extremely strong as far as market movement on Tata Steel is concerned. Tata Motors 3.5% higher, 461, 462 for Tata Motors. Again, it was among the top gainers throughout the day today. It also followed with the Tata Motors DVR that was also the part of the top gaining list. Let's look at the other gainers. So Adani Ports, we were just talking to that with Sushil. That was the fourth top gainer. Bajaj Auto was up around 3%, 2,780. ITC 3% higher, 234 for ITC. Hero MotoCorp was up around 2.9%, 3,320. Z Entertainment 2.6% higher, 453 for Z. Bosch is up 2.6%, 20,780 for Bosch. Maruti Suzuki 2.5%, 5,242. IndusInd, Yes Bank, ONGC, these are some of the other movers in the market where volumes were very high. They were almost up around 2.5%. IndusInd 1,100 rupees. Yes Bank up around 2%, 1,214. ONGC up around 2%, 303. Cipla, Grasim, Kotak are some of the other gainers, gains to the about of 2% or so. The only noticeable loser was Bharti Infratel, but again it was a very, very marginal loser, so not much to actually read into it. Sushil, we spoke about these large cap names. Do you like any real estate names? Some of the real estate stocks did very well, and the sense that the street is getting in that whenever there is a fall in the real estate prices, their volumes would go up, and now their balance sheets are not as bad. So even if the realizations would come down, actually it would be good for their inventory.
See, I would reckon that anybody who wants to invest in real estate, look at prominent brands which are able to do roll out commercial properties or residential properties in large pockets, large size and large areas. So DLF, Shobha, Godrej, Oberoi may be good names to think on a long-term process. Everybody knows that retail story for high-end consumer would be weak, so it will have an impact on DLF. But any company which is rolling out long-term sustainable store theory, be it Apple or Sony or any of these large brands which want to be in India and want to create footfalls more from a marketing established point, all of them will go to a good location first to establish themselves like high streets and then look at it. So, and with interest rate scenario being more towards the softer side, I think people with 8.5%, 9%, right now it's already 8.99% interest rate, and if you get an indication based on this current liquidity led by demonetization, if consumers likely to get loans around 8.5 to 8.75% in the next 3-4 months, I think some of these companies which would be able to establish good sales may have a good visibility on a long term. Plus, REIT launches are likely to be happening faster than before because the interest rate scenario is supportive of those structures. So I think based on that, you may find DLF or any other company which is going to monetize commercial rent receivables is going to be a beneficiary. So I think a weakness can be thought on those companies. And most of these big brands which I have spoken about are not existing in the cash market kind of transactions which we keep hearing about some builders. So, street can always choose between good and bad, but I think the top names should be kept in mind. And specifically geographies which are more averse to cash transactions. So you may find North is more tilting towards cash, but DLF is not in that segment. That's what I understand from my own market sources.
What do you do with something like a Havells or a Crompton Consumer? Is that something which you would look to buy? Great companies, great histories, but there has been a price correction on the concern of what happens?
I think one needs to keep a focus on these companies with 2-3 year kind of a play. I think some of the divestment program which has been delayed at Crompton or Crompton Consumer is a new management right now, so people are watching out. People don't have much access to the management. So I think it's a great play, but you need to take a 2-3 year, 4 year focus, how India emerges, what kind of products they're going to establish more with, and what kind of market share they take away from some of the other players. And possibly the names which you've spoken about may be a good long-term bet. That's what I keep understanding. I don't follow the company regularly, but that's what I keep hearing from analyst community.
Right. In terms of NBFC, any names that you like? A lot of them have seen some good correction.
I think high PE stocks or stocks which are trading at 3-4 times book value may have a little correction pressure as and when the markets correct a bit. But don't get into a frenzy when the market spikes like this and then look at them. But anything which is around a range of this 52-week low or near-term lows which we saw in month of November end or December between this demonetization time, those stocks can be looked at when they are in weakness. Because I personally feel fund flow towards domestic mutual fund, you can assume that 5% of incremental deposit which banks will have on a sustainable basis in 17 will find its way to equity market, be it via treasury or banks or through mutual fund or deposits moving from bank deposits moving towards equity mutual fund flow. So incremental 5% on a 5 lakh, 6 lakh crore of additional deposit itself means 25-30,000 crores over and above normal flow which you will find in equity with lower interest rates. This would lead to a better demand for NBFCs as an equity investor. Other way around, the commercial paper and the bond market is indicative that these banks will be able to lend at a much efficient rate to these companies who are borrowers in these segments rather than just taking fixed rate loans. So NBFC margin may sustain over a period of time and lower interest rate may lead to competition but also a healthy demand possibly in 17.